As always, guys, this is just for entertainment purposes only. This is not financial advice. Hey guys, and welcome back to my channel. I wanted to talk about what we're seeing in the stock market right now. So, as you might have noticed, the SP 500, which is the main tracker in the US, has made a pretty big drop all the way to, well, back to July numbers. Let's go into 1 year. So yeah, I mean, when you look at 1 year, you can see in all over this year, we've never seen such a big drop. And it doesn't really look like right now, like we're accelerating or increasing. The crypto market here, it's not doing better either, because we've seen here an all-time high here around November, and since then it's all been dropping down, and we're getting close now to March levels again, and we might even get to February levels for cryptocurrency. So it looks like assets all over the place are dropping. I don't hear anything yet from the real estate market, but you do have to wonder, once the only way to combat the inflation is to raise the interest rates. That's basically the way you combat inflation. Now, Turkey, for example, Turkey doesn't want to do that. And what we've seen in Turkey is that the inflation is exploding. It's now up to 17%. I've recently been in Turkey, and it's crazy of how cheap you can eat there as a European. And what we're seeing now in the US and in Europe is interest rates are increasingly higher. And of course, the majority of my portfolio, and I would say 70%, is in global ETFs. But most global ETFs have a pretty big exposure of at least 50% to the US stock market. So, for example, I have IUSQ, and there we have Apple, Microsoft, Amazon, Facebook, Alphabet, and all of these stocks are, they're technology, and technology is one of the sectors that is expected to get a revaluation when the interest rates are going to be raised, and they will be raised this year. That's also another thing. We don't know how high they're going to raise the interest rate. So we're talking about maybe 4 hikes this year of, say, 0.25% or 0.55% this year. And then the question is inflation going to start dropping down, or are we going to see more rates? And of course, high valuation stocks are going to suffer from that. And we already saw that. What you don't see here, let me see, in the SP 600. Oops. There we saw already a pretty big sell-off here since November in the SP 600, which is the small caps index. The sell-off already started in November, and as you can see, we're still trending down. Also, the SP 400, that's the mid-cap stock in the US, also since November, especially since December, quite a big crash. Of course, in the last year and a half, we did have a huge year. Every single technology stock wanted to go to the market to take advantage of the premium prices. So there was a really nice offer in the market, but too much choice also means that, if investors don't have enough money, then stock starts to drop. So that's one of the things we're seeing here. And I would like to have a look at especially this report from Yarendi. And here we see the prices, or historically, namely the forward PEs of the SP 500, SP 400, SP 600. And what do we see? We see that the SP 400, the mid caps and the small caps, they are pretty much at the average level of the stock market. So some might see this as an indicator, okay, we're nearing the bottom for the small caps and the mid caps. Maybe, I mean, I don't know. The other thing is, what we're seeing is that the high caps, they've barely sold off, so they're above any historical prices. And yeah, I think, of course, I think there is a few stocks keeping that 40 up much more than they should. For example, you have Tesla. Tesla is trading at a forward PE of like 150. I kid you not, around 150. But all of these stocks generally, like Amazon, I think the price over earnings is like 50 for Amazon. Historically, Amazon has always been high, but of course now Jeff Bezos has left the company, and we have to wonder, like, is it a different company? It also went up 50% in the last year and a half, 2 years. I think about 2 years. Wow, it's already been that long. That's a pretty big gain, even for a stock like Amazon. So I mean, and that's something we're seeing now. We're starting to see the sell-off for these higher stocks. So we see Tesla has had really amazing earnings. So they beat expectations and the stock soared up. And still, what are we seeing now? Trend down, 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 down. You have a famous YouTuber, Meet Kevin. He has 50% of his portfolio into Tesla. I think he might have sold it all off. You also have Katie Woods selling that off now in the long term. Yeah, I think Tesla from here could drop another 75%. Just purely based on valuation, and you could say, oh yeah, purely, yeah, you have to look more at hype. Yeah, right now Tesla have to keep bringing in good numbers every single earnings, but we see even if they're bringing in great earnings, the stock is in a downtrend. And I think we can see a major drop for Tesla, despite of all the believers. But some of the great believers have been selling off, like Katie Woods. And I know it's very, very embarrassing to say that of me as a so sorry for the Tesla believers. But yeah, if I look into the Tesla numbers, I have to conclude something like that. I also have to look at my own portfolio. I have, like I said, 70% in global ETFs. I'm definitely not going to touch those. I think when you look at Europe, when I look at Asia, prices look okay there. I think they'll probably be dragged along a little bit along with the US market, but we're seeing that for this year they're outperforming the SP 500. So that's a good thing, especially Europe. Some markets like yeah, the UK is severely undervalued, while it's pretty much a great stock market. But I do have 15% of my portfolio in the QQQ. QQQ follows the Nasdaq, so but only technology stocks, so more tech based, doesn't follow finance stocks. And what are we seeing there? We're seeing there Tesla. We had yeah, Netflix. Netflix has a great part of it. It doesn't show up anymore because it had a 43% drop. And yeah, you used to have these miners, and they had a bird, a canary, and we say in Belgium, yeah, if the canary died, it might be it's probably that there is more trouble ahead, and yeah, we're wondering, like, is Tesla the canary? And I have to think, do I want to hold on to these yeah, high risks QQQ? That's a lot harder decision than my global trackers, I think. The thing is, like in the next 2 weeks you have Apple, Microsoft, Google, Facebook all reporting, and what we're seeing is if they have a good reporting, sometimes they are rewarded a bit, not always. Look at Tesla. Uh, and sometimes, if they have bad earnings, then they completely crash. And I like, what if Apple suddenly says, "Yeah, we're seeing our sales of the iPhone dropping, we're seeing it lowering." They might also report good earnings. So I don't know, but they, despite some rumors ahead of time, did see like a drop in the stocks of Apple already this year. I think they're down almost 10%. So it's Amazon. I think Facebook is trending down, even Microsoft, Google, and yeah, nothing really changed. Nvidia is down probably quite a lot, and nothing really changed. So I have to decide that tomorrow, but I really strongly have to think if I want to sell off the QQQ. I do see like the Bitcoin market, well, the cryptocurrency market, that trended up a little bit the last day. So we saw an upward trend, and yeah, the Bitcoin market, it goes along together with tech stocks. So we might see a slight push up on Monday. Um, but I'm not excluding that I would sell that 15%. I would hold on to everything else, and I would look for an entry point. Maybe, yeah, maybe by spring, new entry point, and that would go into global global ETF in that case. Um, so yeah, I think that's a question. It's not about going out of the market. It's about reallocating to stocks that I think will do better throughout all the year. Because in 2018 we saw that the whole year was bad until the Fed said, "Okay, now we've done enough interest rates," and then the market went back, and that's because by that time the market had a certain certainty, so they knew, okay, this is it, this is what's going to happen, and the market went back up and recovered almost. They were still 10% down for that year, but that saw a good recovery. But until we see that good news, I think there will be uncertainty in the market, and that's not going to be good for tech stocks. But it's a gamble, you know. The problem with taking money out of a market is, when do you get back in? And that's really the hardest part. I I really don't know about it, but at the same time, I also have to think about myself and see, yeah, the amount of investment has rapidly increased the last year, and yeah, sometimes it doesn't hurt to put a little bit safer. I'm not going to sell any of my individual stocks. For example, I do have like 6% in lab-grown meats, and what I see is CNBC reporting on it. Uh, and it's not the first time, it's the second time this year they are reporting on it. I see so much catalyst. I might even put some of that money that I have on the sell from the QQQ into lab-grown meat stocks if they would have a sell-off. Um, and as for you, like, this is not investment advice, guys. This is, do your own due diligence. I could be the village fool telling you fairy tales. Please do your own research. Very important. But you do have to keep this in mind if you are in the small caps, if you are in the mid caps. Maybe it's not the right time to sell those anymore. Like, I kind of feel like you missed the boat on that one. And only during 2008 here, when there was a really severe economical crisis, or during COVID, when there was a huge, yeah, everything closed, then we saw lower PE prices than this. So also have to keep that into account. That there we're getting quite close to the bottom, but keep your eyes on those large cap stocks. I mean, they can determine quite a lot right now. They might determine where the market is going. So, yeah. I love to hear your comments in the here under here, because yeah, I love to know what everyone thinks. Are we going to see more downside? Are those large caps who've performed exceptionally well in the last 2 years, are they going to start selling off? Or are they actually going to provide really, really good earnings and maybe even push the mid caps and the small caps back up to their original levels? Thank you all for watching. If you like my videos, please like, please subscribe, and see you next time. As always, guys, this is just for entertainment purposes only. This is not financial advice.